All right, the first question here is from Christian, and this is regarding the range analysis that is part of the trader worksheet posted on the EMiniPlayer site. So it's saying that, I see that you're calculating the minimum and the maximum and the average range for the previous 10 days. You're also looking at the first hour range and the overnight range. But how exactly can you make use of this information? Because I've rarely heard you talking about it. So when you're looking at range analysis, in terms of the daily range analysis, it can help you figure out where the market could potentially go, especially when there is no other reference point, kind of like we have these days on the upside. On the upside, there is no resistance, there's no reference point. So how do you know how high it can go? Well, on days like today, you really don't know how high it can go, but you can at least get a rough idea of where it might go based on the range analysis. So as an example, we know that 70% of the time, roughly, the market establishes the high of day or the low of day within the first hour. So that means that if the market is breaking outside of the first hour balance, then either the high is in or the low is in. Now, where could it go outside of the first hour? That's where the range analysis can particularly be helpful because it can tell you how much that range can really expand. It can tell you at what point do you want to perhaps consider taking profit and not really push for more profit because it falls really outside of the range extremes. If you're looking to fade a zone and it's in alignment with a range extreme, then that can increase the odds of that zone actually holding up. And you can place a resting order and take the trade there. So when you're using range analysis, you're essentially trying to project a potential high or low for that given time frame. So if you're using the 24-hour range analysis, then you're thinking about, okay, where could the 24-hour range become quite exhausted? You can combine that with the RTH range analysis. Like what are the RTH ranges these days? And that can give you a rough idea on how the RTH session may end up playing out. So all of these things are being used for potential entries, potential exits, and for anyone who's not familiar with it, I mean, this is essentially what it looks like, right? So you can see that we have the minimum, so that tells you kind of, hey, this is probably at least going to put in a range that's around here, 7.5 to 8.5 points. That's on low volume. And then the maximum tells you, what over the last 10 days at least, the maximum has been. Now you can look at an even longer period, if you want, but this just kind of keeps things simple for the trader worksheet. So it tells you that, the biggest range we've seen recently is about 20 points. The biggest range we've seen over the first hour recently is roughly 10 to 11 points. So if let's say you are in a trade and within the first hour you're getting a 10-point profit in that trade, well, you know that now the market could start to pull back a bit. You're hitting that kind of range extreme for the first hour range. So even though it can continue later in the day, on the smaller time frame, it may now start to at least put in a pullback. So maybe you take profit and you re-engage, or at least it gives you a better idea on how to approach that particular scenario. So there are many ways that you can use it, but primarily you are using it to help establish potential targets. And then if it coincides with a zone, and an actual existing zone, not like the resistance zones that we have right now, because right now there is no hard resistance, right? The market today was making fresh all-time highs, and you can see that we have time frame alignment today, right? Everything is bullish, right? I mean, typically there will be at least there could be one that's neutral, or if it's like totally sideways, but this is an environment today where everything is bullish, and that's why when you have this time frame alignment where the directional bias is bullish, 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 you really want to focus more on the long side and avoid the short side. And again, the range analysis can help you figure out, hey, where can it go? Like for example, 90 to 92 was a range extreme given the recent ranges. Now it ended up going to 2400 because it was a balanced breakout and there was a lot of volume behind it, and who knows where it's going to go. But at least it gives you something to shoot for. So, that's in a nutshell how you can use that information.